Just a few days ago, we were hoping that Palantir is going to reach $40, right before the entire market took a dump on our dreams and forced us to rethink what's going to be actually ahead of us. As one of the market's most amazing comebacks after a massive sell-off, Palantir has been keeping the market's hope to offer some safe haven for capital in the equity market. AI may not have benefited the mankind yet, but Palantir shareholders sure hope that it's going to benefit their wallets first. Hi everyone, I hope that you had an amazing day and lots of profitable trades. In this video, we're going to talk about Palantir and to see if it can make you a lot of money. As we know, over the past few years, things have been rough. Companies once considered as, safe haven and holy grail for those looking for gainful employments have been reducing their workforces and cutting entire departments. And it has been a very traumatizing for anyone involved. At the same time, the sharp rise in inflation has been grinding down people's savings in countries that have only known deflation so far. When the very fabric of our own reality is about to be torn into pieces, we gotta seize that opportunity to start a new, better future for ourselves by ourselves. One of the most important factors to improve our financial situation is to spot where the growth opportunities of tomorrow will be and seize the ones that may multiply our capital exponentially, increasing our funds available for the next investments. The market has been looking for the next big thing, and for many, they believe that Palantir is exactly what they need. Over the years, much more than yet another tech stock begging for our money in exchange of empty promises, it became a major player in the sector that may tell us a lot about how the market appetite for risk exposure looks like, and if the tidal wave is ready to rise all ships. The company has enough reputation and prestige to arouse the market's curiosity as well as people's tendency to follow trends. It is a company that people would often view equally as the risk appetite of the market alongside others like Tesla or Nvidia. So Palantir's reactivity to the macroeconomic tidal waves makes it a very interesting company to look at, to analyze, and maybe to buy. In this video, we're going to take a deep dive into Palantir and see whether it deserves to have a place in your portfolio. Before the video continues, I just want to take a moment to thank you for coming to my channel and to hope that you're going to enjoy your stay and to come back for more content. If you like what you see, please consider to like, subscribe, and check out my channel for playlists of the companies I cover. With that being said, I hope you're going to enjoy today's video, and let's get started. Over the past few weeks, Palantir has been able to climb to around $29 level, reacting to indirect and yet increasingly obvious signals coming from US economies that things are about to change. The stock has definitely resumed its upward trend, aiming for the 30 to 35 bucks, but in recent sessions, the market has taken a major tumble, can we say, and Palantir basically went back to around $24. Over the course of the past few months, the news have been light on the company specific and a lot of speculations on the remainder of 2024. Between the upcoming elections and the mounting pressure from Wall Street to push the interest rates down, the stock's price action has been able to hold itself above the $20 level while looking for consolidation and probably recovery. A lot of people were looking to find a decent entry point to make a comeback for more exciting parts of the market, and over the past few months, things have been looking on the verge of changing. The financial results that were supposed to send Palantir above $30 ended up having a lot less effect than what we anticipated. As people's attention have been focused on the larger picture of the global economies potentially dipping back into the red with a large amount of uncertainties lying ahead of us. Because of the nature of its shareholders' base, Palantir has always been a stock made of momentum, a lot of anticipation, and a large dose of self-fulfilling prophecy, instead of serious analysis of things based in reality. Just because its financial results are decent may not be enough to boost the current price, or at least not to the point we wish it would. We can see that its widening scope has grabbed the market's attention far more than anything else. And so far, the resistance turned support levels have been identified at $25, above which the new goals to surpass are $30, with support levels between $20 and $23 providing some stability or a baseline to its price movements. These levels have served as important markers for investors, indicating potential areas of price reversal or continuation, and are being retested now. The short-term trends of Palantir stock still appears to be bullish, with a pullback that is probably going to be recovered. The previous decreases in both interest and the volume from investors haven't changed the overall direction that Palantir has taken. While the overall trend remains bullish, short-term weakenings are probably to be expected due to the ongoing uncertainties and volatilities. Regarding volume, I would say that the trading volume is still around 20 to 50 million shares, which is a lot considering that at some point Palantir's stock volume dipped below like 5 millions a day. So I would say that it's usually healthy. And over the next couple of days, it wouldn't be surprising if it goes above 100, just because people want to jump on the bandwagon of the recovery. As the market continues to go through uncertainties with the upcoming elections, interest rates decisions, trade wars, actual wars, routes disturbances, and so on, the invisible hands of the market are going to be, quite tempted to put their capital on the table either for profit and at the same time to safekeep the same capital in order to navigate the darker times ahead. So this is maybe the great division between those who want to seek safety and those who want to seek opportunities. But opportunities may come at a cost, none the least the psychological scare that you may experience if your holdings take a massive decrease in their values. On a fundamental level, Palantir has always gathered a lot of interest from retail investors to look up to and for commentators to talk about. It does have a lot of retail shareholders and onlookers trying to get into the game. If anything, this might be one of the potential weaknesses for Palantir's long-term outlook, the fact that institutional investors have yet to own the majority of Palantir shares. This would be a sign that despite its solid business models and reliable revenue streams, Palantir may be perceived to be too expensive by the institutional capital. This increased presence of retail investors also explains why Palantir is known to be a very volatile equity. So ever since its debut in the secondary market, the sentiment has been overwhelmingly reactive. A lot of people are eager to capitalize on any trends or momentums that they think they have seen, including the company's own technology on the way up and the wider tech sell-off on the way down. Palantir's journey has often been characterized by those intermittent but prolonged periods of changing moods, from one extreme to the other. One significant aspect of Palantir's price movement is the correlation between its fundamentals and the macroeconomic news cycles. Events like geopolitical uncertainties, supply chain issues for large economic sectors, interest rates decisions, or government regulations for narratives like AI, data, and innovation in general could have a lot of impact for the share price, and simultaneously been affected by the company's own news regarding its financial performances and guidance from analysts. On the other hand, the relevance of analyzing the news exists, but is relatively limited. It's observed that the news surrounding the company is closely reflected in the price action, but not the other way around, meaning we often see articles trying to explain what has already happened, but very few that are able to predict what's actually going to happen in the future. So, on the way up, everything looks great. The company is going to take over the world. On the way down, news become like very negative, and they're going to amplify the existing selling pressure and fear. This probably goes for most stocks that you might be interested in, because the news cycles may be interesting to confirm where the wind is currently blowing, but not necessarily where the wind is gonna blow in 2 weeks or a month, a year from now. As things currently stand, Palantir has been able to maintain its bullish trend in the long term, with somewhat of a diminishing marginal increase in the short one. So, in terms of financial performances, it is definitely something that has been going for Palantir. It's, of course, good or useful to keep it above like a certain support level, but not really enough to keep pushing it. Since the stock has already been through a period of massive sell-off back in 2022, the rock bottom, the sub $10 might not be reached for a long time to come. With that being said, it's definitely something to keep an eye on, because Palantir's financial reports are known to be able to move the market over the years. The key levels that I tend to look at are the cash levels, the gross margins, and the growth. The cash levels are basically something that'll tell you if this company is going to come back and beg for your money once again while diluting your participation in the company, just because they need money injection to keep the company afloat. The gross margin validates whether the business model is good, because what it means is that every additional dollar that they get is more than the additional expense that they have to incur in order to generate that additional revenue, if it makes sense. In other words, if you give it enough time and patience for the company to grow, it's gonna make money for sure. Like, the gross margin will tell us that. The growth is going to be particularly relevant for Palantir, because we're not buying the Palantir that is at the moment. We are buying the Palantir to become. So if the growth accelerates, more people are going to assume that Palantir is going to be even bigger than what we think it's going to be a few years from now. And if the growth speed decreases, then we're going to see a lot of people exiting the market, because they're not buying what's currently on the table. They want to buy what's going to be on the table. So this is like the value of Palantir's financial performances. I would say that for the first two measures, Palantir is pretty promising, because the cash levels are good. They're not looking for our money. The gross margins validated its business model a long time ago. And the growth is where maybe there could be some weakness, because even though the growth is so positive, recently it has slowed down, because on the public sector, like on the public sector contracts, their growth has not been as significant as people thought it would be. Now, given its symbolic and size-related significance, investing in Palantir does come with its own opportunities and challenges for investors who are looking for some more exposure in this industry. There are different levels of considerations that may influence the decision-making process. One of the primary reasons investors are drawn into Palantir is the growth potential. It's often positioned and considered, rightfully so in my mind, as a leading player in the data analytics sector. It generates in a field with a lot of promise in like the future economy. And businesses will probably need more data insights to inform, to improve on the decision-making process. Companies like Palantir are well positioned to capitalize on this trend. With its expertise in handling and analyzing large volumes of data, Palantir does stand to benefit from the growing demand for data-centric solutions across various industries. Also, Palantir's own financial stability can reassure many of us, because unlike the tech startups often operating at a loss, Palantir is currently making money. So this reduces the likelihood for the company to come back to us and to beg for our money again. Now, it has also demonstrated its capacity to capitalize on popular trends to generate significant interest from the market, especially amongst the retail traders. Through strategic moves and also strategic announcements, shall we say, Palantir has enhanced its visibility and appeal, especially amongst the retail traders. This ability to capture the market sentiment at the right time, in the right method, really shows us that it does have the potential to enjoy some significant growth and success in the medium to long run for a company of its profile. But with that being said, investing in Palantir is not without its risks and challenges. One potential issue is the possibility of legal problems about the privacy, the ownership, and the proper usage of the data. The company deals with sensitive information, and Palantir may face regulatory scrutiny and legal challenges which may adversely affect its operations and reputation. Any negative developments in that area may significantly impact the company's financial and reputation value. So another potential issue is the company's reliance, and we talked about this a bit earlier. The company's reliance on public sector for contracts is a problem. The government contracts can be lucrative. They also come with some degree of arbitrary decision making because budget can be cut. Vendors can be switched around just because somebody doesn't like someone. If government agencies decide to cut back spending or shift their policies, this can have a massive effect on Palantir's growth prospects. And also, this concentration of revenue and eyeballs, really, to a single source of income kind of exposes investors to some additional risk and volatility. Another potential downside would be the possibility of a shift in narrative. AI is currently popular, just like EVs used to be popular, just like fintech used to be popular. Is it going to still be popular in the future? That is a very good question. Personally, I think it would, but if you're not so sure about the answer of that question, then maybe think about like other options in the market to put your money into, because this is something that has to be assumed when you get into a stock like. So right now, the global markets are facing a complex interplay of factors that have the potential to significantly influence the equities worldwide. In this speculative analysis, I believe that the consequences of the global inflation, surging commodity prices, and decline quantitative easing, as well as the rise of inflation rates or interest rates, plus the geopolitical instabilities, are going to play a significant part. The increasing inflation rate has been putting pressures across the globe, threatening the purchasing power, raising the input costs, and impacting corporate profitability. Companies operating internationally may face challenges in managing rising production costs and also to sustain profit margins. Those dynamics could trigger market volatility as investors adjust their risk-return expectations. The upward trajectory of commodity prices, including energy, metals, agricultural products, have been having far-reaching implications for various sectors of the global equities market. The companies heavily dependent on these commodities may experience squeezed profit margins, potentially affecting stock valuations and investor sentiment. The reduction or the end of QE's quantitative easing measures by the central banks worldwide may have resulted in reduced market liquidity. So this in turn could lead to higher borrowing costs for companies seeking capital, which may also discourage investment activities or will. The elevated market volatility plus the reduced investors' appetite may also continue to occur. Now, the central banks around the world are tackling this delicate situation of balancing the inflation rates with the economic stability and, if possible, growth. Central banks opted for aggressive interest rate hikes to combat inflation. Borrowing costs for companies have been rising, which has also slowed down business activities and also fueling the market's volatility in terms of the equity prices. Now, ongoing geopolitical tensions, including trade disputes, political uncertainties, and social unrests, will inject an additional element of volatility into the global markets. Investors may adopt a cautious approach, shifting towards safer assets, impacting the equities. Additionally, the escalating conflicts may disrupt supply chains, negatively impacting the performance of international companies. Given the interconnectedness of global markets, the aforementioned factors have reverberating effects on the US equities market. Companies with significant exposure to international market may face a lot of headwinds resulting from the economic slowdowns, disrupting the supply chains and the currency fluctuations. But nevertheless, the US market is known for its resilience, and the diverse sectors may attract investors seeking safe havens. So, really, the current landscape is characterized by global inflation, surging commodity prices, reduced quantitative easing, rising central bank inflation rates, geopolitical instabilities, and also ongoing lack of certainty regarding growth. While the US market may exhibit relative strength due to the safe haven status, it's going to remain interconnected with the global economic landscape. For long-term investors, these conditions may offer opportunities to identify undervalued companies with strong fundamentals and international diversification. With that being said, short-term trades should be approached with caution because of the increased volatility and uncertainty. And also, we should be careful when assessing individual companies, sectors, or regions. So, having said all this, what is my opinion about Palantir? I would say that it's an interesting stock to buy and to hold for the long run. And in the short run, previously I've been saying, slowly trickle in so that the short-term volatilities can be worn off. Well, right now the volatilities kind of suggest that we need to buy in a big chunk of our allocated capital into Palantir so that we can benefit from the recovery on the way up. That is my feeling about where Palantir is probably going to go. Long run, it remains unchanged. But in the short run, I think that the current volatility phase is just going to be a phase, and it's not going to last that long. Of course, more volatilities may come in fall of this year as the election really kicks in. But other than that, I would say that right now it could be a good opportunity for those of us who want to have any sort of significant participation in Palantir to make the current moment a starting point or an entry. The maximum exposure should be between 8 to 10%, and the holding period should be between 24 to 36 months.